you so much for joining us today. I've got Brian with me, and we're going to be talking about emerging technologies and kind of compliance and regulation areas that are attached to that within the insurance industry. But before we get going with the questions that I've got for you, can you give everybody an introduction?
Yeah, thank you, Emma. Nice to see you. So Brian Casey is my name. I am a partner at the Locke law firm based in Atlanta and co-head our corporate and regulatory insurance practice.
Great. Thank you for joining me. So to get us started, I teased the idea of it, but how are you seeing emerging technologies, whether it be blockchain or AI, or maybe even simple things like text messages and just the way the world is changing? How are you seeing those being used within the insurance industry today?
Yeah, broad topic, but important nonetheless. Let's start a little more general. So before we get to more modern things like blockchain and AI. So I'm dating myself here, but I was probably in my early 30s, when the e-signature law and e-records laws came in. So surprisingly, 20 years, but we still have clients that are just beginning to use e-signatures. And some of that was spurred, I suppose, in part because of the recent pandemic. But over a 20-year period, and I can't really say quantitatively whether 80% of the companies are doing this and 20% aren't, but we still get projects to this day for clients that are just now doing their first e-signature process, which is a little shocking in some respects. So that's kind of my origins in terms of in the .com era in terms of e-commerce, and then bringing that forward here. So when you move into the digital era, e-signatures, of course, are an important part of that business process. But many clients, and because they're customers, want to do business with the company digitally, and in some cases, simply through the phone. And that's a big change in business process and legal and compliance angst for a lot of companies that are used to doing things in a more old-fashioned way. So as our clients get that demand from their customers, we have to adapt and help give them advice so they can adapt to do business in that manner. So, for example, some of our auto insurance clients have customers that don't have tablets, don't have computers of any kind, and just live on the cell phone. And that's how they want to do business. So we have to help them figure out, okay, how can we do the solicitation, engage with the customer, accept the policy application, deliver the policy, send them premium notices, send them notices of cancellation or non-renewal in the case of property and casualty products, and how can we do that all through a phone? And without going into too much in the weeds here, that certainly invokes the e-sig and e-delivery laws. And in some of those cases, so let me give you a specific example. A couple of weeks ago, we were looking at this example, trying to deliver a policy through a phone. So, the client would send them a text message, get the application, all that, send them a text message, here's your policy, click this link. And the first question is, what happens if the customer doesn't click the link? Well, we would build in a consent form that says, you agree, customer, when we've delivered the link, we've delivered the policy, even though you haven't accessed it. Just in the old-fashioned day, to compare it, we sent it in the mail, it went in the mailbox, and you didn't open it, right? So you try to draw those analogies with the former paper process world. And the question then was, in this specific issue, was for purposes of sending notices that are required in the insurance code, send it to the customer's last known address. Well, the question then became, is the phone number and the place where we sent the text message an address for insurance, law, and regulatory purposes? And if you go look at the e-sig laws, which also include e-delivery, it basically says an electronic address is any electronic address that the parties agree to, here the insurance company and the policyholder. So I think you can thread that needle that way, but then there's the practical side of it. Okay, what's the insurance department's view going to be of that when they come to examine the insurance company and say, we want to see your notices of cancellation on renewal for the last 2 years? And we say, okay, here's some documents that show we sent it to a text. So there's that practical regulator acceptance and acknowledgement dimension that requires, in many cases, conversations with regulators to get the comfort you need.
So kind of going off of that idea of regulatory concerns, trying to put my words together there, what other areas, so you gave us a really great example there with is a phone number and address, but what other types of concerns have you seen tied to emerging technologies and compliance within just financial services in general?
Yeah, maybe let me address that in the context of AI, and we can go a little more deeper on AI. So, artificial intelligence using so-called alternative data or non-standard data, whatever that may mean, data that hasn't been conventionally used for the last 50 years or so. There are concerns by regulators of the lack of transparency, what's behind the black box, what are these algorithms doing and not doing, and what's the effect of them on customers or potential customers. So transparency, and explainability to either the regulator and or the customer of what these algorithms do. And privacy, of course, is a concern in many areas, including AI. Fairness, just general fairness. If I don't want to engage with a company that way, if I'm a consumer and somebody else that's of equal risk to me, am I getting treated in an unfair manner that's prohibited by law? And part of that unfair issue is unfair discrimination. So insurance companies are prohibited from making rates that are unfairly discriminatory and can't make rates based on protected classes, race, and gender, and things like that. So there are concerns with the regulators on, do the results of these algorithms that are being used for AI processes have the effect, not the intent, but nonetheless have the effect of producing prohibited discriminatory results for underwriting and rating purposes. And we call that proxy discrimination, is one term people use, where there's a factor that's being used in the algorithm, and it's not based on race, it's not based on any prohibited class. Let's take education and occupation, for example. Now, those factors are prohibited in some states, about 10, but not in others. So, is there a proxy as a result of the AI? If I say, well, I have a undergraduate degree and I have a law degree and I have a master's in tax law, is the factor, those three factors, are they correlating to an inference that I'm a white male, age 50, that lives in a certain part of Atlanta, for example? So that's a big issue. Now, the reality is that we're in the infancy of AI regulation, if you will. Now, there are some state insurance departments that have issued data requests or enforcement notices of their position that if you're using, quote, alternative data, that you have to monitor and be able to prove that there are no prohibited discriminatory effects on the use of AI. Now, proving a negative, that's something that lawyers never want to hear, right? Because I can't do that. The reality is that not only the insurance companies are hiring lots of AI employees, but the insurance departments and other regulators in financial services area, they have to get the internal resources and knowledge to begin to regulate, however the regulation may end up being. So the government, frankly, is a little behind the eight ball in terms of getting and retaining qualified people to help themselves to understand what's going on with AI here.
This idea of the bias behind AI is so interesting, and it's not just within the insurance industry that this is coming into play. I was at a conference a couple of weeks ago where they were talking about specifically data science and algorithms that are driving some of these underwriting decisions. And certain insurers are kind of taking it upon themselves to ask the question from some of that like inherent bias, like just because we can, should we be building models on these things, and kind of asking some of those ethical questions on their own behalf. But there is going to have to be some guiding principles as we move forward to see these technologies becoming more and more a part of our decision making, and kind of how do we balance these decisions and make these choices, and how the technology dictates our lives. So as my last question, I suppose kind of ties into this, as insurers or other organizations are looking at bringing emerging tools into their organization, what kind of advice do you have for them to make sure that they're still staying in compliance and still meeting regulatory rules that are put in place, and how should they think through that process on their side?
Yeah, great question. Excuse me. I think you got to recognize that it's a little bit of a moving target here as the regulations evolve in this area. But I think you got to understand specifically what is the question, compliance issue, and where are the winds blowing, and where the regulations might or might not go. Understand those directional cues, and then you've got to analyze. Okay, am I plain letter reading of the law? Am I complying here? Maybe I'll give you an example here too. When I just had this come up yesterday. So an InsurTech client, and they have built the quote platform, which is not a word I like to hear these days because it doesn't mean much to me. And okay, we built the technology. It's great technology. They're licensing it to an insurance company. The InsurTech is also in the middle of the insurance transaction. In the middle, meaning they've licensed the technology to the insurance company, but they're also doing services for the insurance company. Now, they're not selling the policy. Their brand is not out there, but they're making it all happen behind the scenes. So they told me, well, we're binding insurance. What do you mean you're binding insurance? Well, our platform is binding insurance. I'm like, okay, the platform is not a legal entity. You may think of it that way, and I know it's your baby because you created it. But there's only three answers on the binding question. Either the insurance company that's licensing your technology is doing that, or you're doing it, or the retail agent, somebody else, a third party, is doing it. And they didn't quite understand that it was really their customer, the insurance company, at least in my view, that was the licensee of the technology that is, from a regulatory perspective, is the party that was effectuating the binding of insurance coverage. Yes, it was done through the platform. Yes, our client was the developer and the licensor of the platform, but it wasn't really the party that was pulling the trigger on the binding decision. So you've got to kind of get into the weeds and understand the relationships first, and then peel the onion and say, okay, who's doing this specific act or action that requires regulatory compliance? And it may be vague to begin with, but once you sort all that out, on who's doing it, then you can figure out whether they're doing it in compliance.
Oh, all the challenges we have ahead of us to figure out.
Yeah, it's kind of fun stuff.
Well, thank you so much for sitting down to kind of talk through some of these ideas with me. For anybody that isn't, make sure you go follow Brian on LinkedIn, or you'll be hopefully able to catch him at a conference like I did, and we got connected that way. But thank you again for your time, and thank you for joining us, everybody, and have a wonderful day.
Bye-bye.
If you're looking for expert tips on how to get started with your transformation, or looking to hone in on your approach, make sure that you subscribe to our channel to catch our weekly Digital Transformation Talk series, where we interview experts from around the world on how to make it happen.